welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lavisha Darad, and it's turning out to be a very quiet Wednesday for the markets, given that both the headline indices have been range-bound. But yes, Sensex is down by about 38 points. Even Nifty, for that matter, that has stayed below that 24,300 mark. But one good takeaway for the market has been that the market breadth, that has remained in the positive territory. You can see more stocks which has been advancing versus the stocks that has been declining. Now, apart from that the market breadth has remained quite favorable towards the advances. Even the financial stocks have been holding up quite well. Yesterday, in the last couple of minutes, we did see that the Bank Nifty index had staged quite a recovery from the lower levels. Even today, for that matter, this is one particular sector which has been gaining ahead. So yes, Bank Nifty up by about 0.5% as well. Both PSU banks and private lenders have been contributing to the Nifty's upside. But on the downside, you have Nifty IT index that has snapped its two-day gaining streak. You can see Nifty IT down by about 1% itself. Now, markets will be awaiting NVIDIA's results today, so we'll watch out what it means for the AI rally going ahead, what the guidance numbers come out with, and whether or not that impresses the AI craze that is going on around the world itself. And what it means for the Indian IT stocks going forward is something we'll watch out for too. So yes, ahead of the numbers, Nifty IT definitely consolidating, seeing some bit of a cool off after 2 days of consecutive rally. Now, apart from Nifty IT, some of the other sectoral pockets which is also coming under selling pressure, that includes the likes of autos with about 0.4% decline, FMCG also not holding up well with about 0.7% drop, realty also seeing a bit of a cool off, 0.2% decline coming in for the Nifty realty basket too. But overall, you can see a good participation coming in from the broader end of the markets, while the large caps have remained subdued. Mid caps have come back into the green with about 0.1% gain, and small caps, for that matter, that's largely outperforming in today's trading session with about nearly 1% gain. That's your small cap basket. So yes, once again, broader end of the markets shining ahead despite what we are seeing a choppy session today. Now, we've seen about 5 stocks that have seen a block deal, which is worth about 6,900 crore rupees, and that's the reason why we are seeing a bit of a a crunch in the markets too. Of course, there's a higher liquidity, which is why the markets have seen a bit of a downside in today's trading session. But apart from that, overall, the global cues have remained quite steady. You can see that Brent crude prices, that slipped by about 4% to about $85 per barrel. Yesterday, it was at about 90, and right now it's slipped to about 85 too. So yes, that's a key. That's also a key variable that's contributing to the overall market texture, which has remained favorable towards the advances. But apart from NVIDIA's results that we'll be watching out for today, we'll also be heading and understanding about the US July PC inflation data, which is a key metric for the Federal Reserve to understand what their rate trajectory would look like down the line. And we'll also be getting the second quarter GDP data too. So yes, all of those numbers we'll keep an eye out for in terms of the global cues. But let's take a quick check of how the large cap movers and shakers look like on the Nifty 50 index. On the gainers front, you have Kotak Mahindra Bank with about 4% gains, leading the charge, followed by HDFC Life. Ultratech Cement also holding up well with about 2% gains. Axis Bank, JSW Steel, some of the other gainers on the Nifty 50 index. And on the way down, you have some of the tech stocks which are dominating the list. For instance, your Infosys, Tech Mahindra, both of these stocks are seeing a drop of about 2% each. L&T also not doing well with about 1.5% drop. Nestle, Bharti Airtel, some of the other losers on the Nifty 50 index. So yes, those are some of the large cap gainers and losers. Now, let's discuss all of this, how the last minutes of the trade looks like, some of the stock specific action. Let me quickly go across to our first guest of the show. Joining me is Rajesh Palvia, who's the Senior Vice President Research at Axis Securities. Rajesh, good afternoon. So good to have you. Yeah. And after we did see that the August series had ended on a positive note for the Nifty, the September series we have started on a muted note. How do you see today's trade setup looking like? And of course, what levels are you watching out going forward?
Hi, good afternoon. So it's a very first day for September series, and looking at the rollover activity, for Nifty again, it's higher than last 3 month, 6 month averages, as well as for Bank Nifty also. So we have seen higher rollover for compared to last 3 month average and 6 month average. But there was some shedding in number of shares compared to the previous series. broader market has shown a strong rollover, and some of the sectors and stocks where strength are there, they have shown positive rollover. So we believe that Nifty has already corrected in the second part of August series and almost took support from the important support area of around 24,000, 24,200 trajectory. So if we continues to hold about 24,200, 24,150 zone, I think where the major put writing activity is showing sign of confidence. So I think we could see some recovery to takes place in indices. But again, on the higher side, the cluster of supply zone is placed at around 24,300 to 400 zone. So if we able to take out 24,400, then we could see some good amount of short covering action to play out in Nifty, and then Nifty can scale further. But if I compare with the Bank Nifty is looking one notch better compared to the Nifty at this juncture, as Bank Nifty is trying to penetrate its major supply zone, which is at around 57,800 to 58,000 range. So if at all Bank Nifty able to take out 58,000, I think then we may see some leadership from the banking space, and then Bank Nifty can move further another 400, 500 point from those level. So Bank Nifty can be looking more attractive, and one can hold their position on the long side of trade for banking stocks as well as for Bank Nifty with stop loss of 57,500. Nifty, we may see some consolidation, but I think one can focus on the sectors where strength is clearly visible. So that may give you good profitable trades in this kind of consolidation of Nifty phase.
Okay, got it, got it. But it's the bank Nifty which has been outperforming in today's trading session. All of these private style lender stocks, for instance, Kotak Mahindra Bank has been holding up well, and then you have ICICI Bank also doing well. Yesterday also we did see a sharp recovery from the lower levels. Today it has bucked the overall trend. What should we watch next?
So definitely, Bank Nifty is looking strong, and we believe yes, some of the private sector bank as well as PSU banks are also showing sign of strength from since last couple of days, and we believe that Bank Nifty if able to take out 58,000, yes, there could be a good run up we may witness in the near term perspective. So from private sector bank, yes, Kotak Bank has already managed to give breakout, so we can look to buy this stock for upside target of 440. On the downside, 408 needs to keep as a stop loss. Again, from the private sector bank, ICICI Bank is also consolidating at a higher band of previous rally. So here also breakout is expected if a stock able to surpass 1465. ICICI Bank may also contribute to this up move, and then we believe that 1490 to 1500 would be the target for ICICI Bank. From PSU banking basket, if I look at some of the stocks like Union Bank, Canara Bank, PNB, these three banks can be looked at from the PSU banking basket, and I think some strength is clearly there in the near-term chart. So these three banks are looking promising from PSU banking basket.
Okay, all right. That's your take from the financial sector. But one particular sector which has also been shining today, that's your Nifty Metal, one of the top sectoral movers of the day. And, from the past 2 weeks, Rajesh, we have been seeing metal stocks have been gaining traction because of the weakening dollar. What catalyst do you think will drive the further re-rating?
So I think Nifty Metal Index is almost now near to trading near to its all-time high trajectory, and I think in next couple of days we could see new all-time high trajectory for Nifty Metal Index itself. But if I look at the stocks from the metal basket, I think SAIL is on top buy list as stock has already broken out its immediate supply zone, and looking at the strength on the near-term, short-term chart, we believe that SAIL may extend. Steel Authority can extend its gain, and possible target towards 210 we may see in the near term basis. Again, Hindustan Copper, Hind Zinc, Hindalco, all these stocks are showing sign of strength. So for risk to reward point of view, I think Hindalco is looking a little attractive as stock is now managing to surpass its immediate supply zone, which was there since last couple of weeks. So I think any breakout about 1065 can take this stock further higher to 1100 to 1120 kind of zone. So Hindalco one can look to buy at this moment. But looking at the strength in overall metal basket, I think another 4 to 5% kind of up move we could see in this stocks in the near term. So overall strength is there in the metal index.
Okay, strength is there in the metal index, and you are watching out for an all-time high also. So nearly 400 points gain in the coming days is something that we'll be watching out for the metal basket too. But yes, let's move on and talk about the talking point of today. That's your 5 stocks which have seen large trades which was worth about more than 6,900 crore rupees. We've seen a series of block transactions which has taken place across the NSE and BSE, be it in Grow, Physics Wala, Rubicon Research, Wellspun Corp, and Viyash Scientific shares. So yes, the stocks have moved in different directions after the deals. Physics Wala, Rubicon Research, all of these stocks have gained. Grow is seeing a bit of a downtick, but still it's been heading upwards. Rajesh, for you, how are you seeing today's price action post the block deals?
So I think if I look at the stocks which you have mentioned for this block deals, I think Wellcorp clearly in uptrend. Most of the supply pressure is absorbed, and looking at the overall structure, Wellcorp may extend its gain if it continues to trade above 2200 level. So 2200 is the important level to watch for. So Wellspun Corp one can look to buy. Overall structure is bullish, and we believe that another target on the high side would be around 2450, even 2500. Grow is still consolidating since last a couple of week in the tight range. 206 to 206 to 190 is the band for this stock. Any breakout about 206 may attract some buying interest in this counter, and then possibly we may see some upward trajectory in this counter. So till the breakout is not taking place, I think one can buy at lower band of the this range. So buy around 190 zone, keep stop loss of 185. If we analyze physics wala again, stock has given a breakout on falling trend line on daily chart, but still follow-up buying action is still missing. Stock is struggling to cross its 50-day moving average supply area, which is placed at around 130 mark. So any weekly closing above 130 may attract some buying action. Uh, Till breakout is not taking place, I think one can wait and watch because still structure is not that much great for near-term structure. So we will look to buy above 130 only.
Okay, all right. That's the take for Grow and Physics Wala. And of course, both of them have been showcasing a mixed trend. While Physics Wala has been bucking the trend with about 4% gains, Grow has been trading downwards. But yes, let's move on and talk about another part of the segment. That's your Hindustan Copper. Given that its retail portion of the OFS has opened for bidding, and today the stock is seeing good up moves of about 4 to 5% itself. Now, this came in after the non-retail portion of the issue received a strong response yesterday, and we've seen that's the reason why the government decided to exercise the entire green shoe option, taking the potential stake sale to about 6% from the base offer of 3% itself. Yesterday also we did see that the OFS received strong demand from the institutional investors, and the issue was subscribed by about 3.4 times. We'll watch out how the numbers pan out today. Coming to you, Rajesh, for Hindustan Copper, not just today, but in the past 1 month, the stock has seen good buying activity. What level should we watch out in the near term, and can we expect higher levels?
Yeah, so definitely stock in this OFS, we have seen stock has corrected towards its 20-day moving average, and the sharp recovery we have witnessed from the same level. As whole metal basket is shining today, and the kind of recovery which we are seeing in Hindustan Copper in today's session, I think the correction is already over. So overall structure is bullish, and we believe 580, 590 would be the next target for this counter. So one can hold the position. 540 needs to keep as a stop loss.
Okay, 540 is a stop loss for Hindustan Copper. 4% gains coming in for this particular counter. Now let's move on and talk about Varun Beverages. The stock is seeing a bit of a downtick despite what the company has planned to enter the alcoholic beverage segment and set up a joint venture in Tunisia. That's the reason why JP Morgan has given out an overweight call, setting a target price of about 530 rupees. seeing that the new initiatives could diversify its portfolio and create additional medium-term growth opportunities. Rajesh, how would you view the stock's performance? Because since June peak levels, the stock has already declined by about 22 to 23%.
So I think structure is still weak, and there is no recovery taking place in this counter. Whatever recovery is coming in this counter, again and again, supply pressure is there. Overall structure is weak for Varun beverages. Series of lower top, lower bottom formation is taking place. Since last 7 8 week, we are seeing continuation of downtrend. So my advice would be avoid at this juncture. Maybe we could see further more lower level towards 405. So sell on rise would be strategy until the stock not able to take out above 445, 450 zone.
Okay, all right. That's your call for Varun Beverages. And let's move on and talk about United Breweries also, given that we did see that the company said that it has expanded Heineken Silver across Kerala, Odisha and Madhya Pradesh, all of these three states. And the management has said that they remain focused on strengthening their premium portfolio and making the brand available to more consumers across the market. So yes, three states they have announced their expansion. And United Breweries, however, not seeing much of an action despite and seeing a bit of a cool off from the intraday higher levels. Rajesh, what's your call? Anyways, the stock has been quite choppy so far this year. Can we expect that the near term would also remain structurally weak?
I think still structure is weak, and until the stock not able to sustain above 1400, 1450 mark, trend is likely to exhibit further in the weaker side only. So at this juncture, those who are trader in nature, they should use any pullback as a exit opportunity or shorting opportunity at higher level. On the downside, stock is now trading near to the crucial support area of 1320, which is very important and crucial for this correction. If stocks breaks below 1320, I think we may see furthermore downtick towards 1280, even 1260 kind of zone. So at this juncture, there is no advice to buy at this juncture. Structure is still weak.
Okay, structure is still weak for United Breweries. Let's move on and talk about another stock in focus, that is your Cipla. The stock has been trading lower with about 0.4% decline after we did see that the company's Pithampur manufacturing facility has received about 7 observations from the US FDA in a follow-up inspection. While the company has said that it will be working closely with the US FDA and address the observations comprehensively, and they are not seeing any material impact to the business operations as well. So yes, 0.4% decline coming in for Cipla. Your take, Rajesh, for Cipla as an individual counter, what lies ahead?
So stock has broken the upsloping trend line support area on the weekly chart. This is the fourth consecutive week where stock is displaying some bit of supply pressure. Stock has corrected from the level of 1500. Looking at the breakdown on the near term chart, and stock is now trading below to 20-50 day moving average also. So near term charts are showing weakness, and if it's sustained below 1450 level for next couple of days, then I think we may see furthermore profit taking in this counter, and stock may correct further to 1380 or even 1360 zone. So at this juncture, avoid at this juncture, we may see further more lower level for Cipla.
Okay, further lower levels likely for Cipla. Now let's move on and talk about Cyient, given that the company has outlined its growth and margin priorities at its investor day, and that's the reason why the brokerages, they have offered mixed views on the pace of recovery. Now for the near term, the company has been targeting EBIT margins of more than 15%, while its medium to long term ambition is to deliver an industry leading growth alongside of the EBIT margins of over 16%. And that's the reason why the stock is at the day's high level also with about 7% gains. Rajesh, anyways, the stock did see a recent breakout, and since then the stock has been firming up. Can we expect higher levels, and what should investors do at the current market price?
So a very strong buying action for this week for Cyient, and looking at the volume action and the breakout of consolidation, we believe that if it's continues to trade above 1020, mark, I think we may see furthermore upside towards 1100 to 1140 also. So after a long corrective move, stock has shown a sign of recovery from the lower level. So I think one can hold on the position, trail stop loss higher would be the right strategy. 1015 needs to keep as a stop loss.
All right, that's your call for Scient, and of course, we'll watch out how the stock behaves in the coming sessions. Now, let's move on and talk about Jubilant FoodWorks. The stock has been trading sideways in today's trading session, despite we did see a global brokerage firm, Macquarie, upgrading its rating on the counter, where they have given out a neutral call from an underperform rating and has given out a target price of about 520 rupees per share. Now, what makes them bullish is that they believe that the demand has recovered over the last 2 quarters, and that will eventually drive EPS and target upgrades across the board. And over FY26 to 20, they're seeing about 20% earnings EBITDA compounding CAGR across the space as well. So yes, despite a positive note, the stock has been trading downwards. Rajesh, your call for Jubilant Food from a technical standpoint, how do we see? Because past 1 month, decent traction in the counter.
Yeah, so stock has shown some recovery from the oversold trajectory, but still, if we analyze the short to medium term structure, still 540 is the key level to watch for until the stock not able to take out 540. Trend is still weak for short to medium term perspective. On the other hand, 490 is the key level for near-term setup. If it breaks below 490, I think again we may see some more supply pressure to come in this counter, and then stock can correct further. So at this juncture, those who have bought at lower level, they should trail stop loss around 490. And if any move comes in the near term towards 520, even 525 zone, one can look to book profit in the further upside.
Okay, all right. That's your Jubilant Food. We'll get to the closing rates in just a bit. 2 minutes left, but let's also discuss about another stock in focus. That's your DCB Bank, because we have exclusive reports coming in from CNBC where TV18 that the company is in discussion with private equity investors for a potential capital infusion. And they're saying that the talks are at a preliminary stage and there has been no final decision which has taken place. So the size, structure and the timing of any potential investment, that also remains under discussion. But yes, despite that, the stock has seen a good traction today. It has cooled off from the intraday higher levels, but still quoting about 3.5% higher. Rajesh, what's your call for DCB Bank? In the past 4 to 5 days, the stock has already delivered about 17 to 18% returns.
So overall structure is bullish, and stock is almost now trading near to its all-time high zone. And I think looking at the near-term, short-term strength, we believe that till stock is trading about 205, I think one should remain on the long side of trade. Possible up move towards 225, 230 we may see in the near-term perspective. So hold would be the advice. Even fresh buy can be deployed with stop loss of 206 on the higher side. 225, 230 would be the target.
All right, 235 could be the target for DCB Bank, and the stock has been trading higher. Now, let's move on and talk about Vodafone Idea, given that there are some reports emerging saying that the company and BSNL have reached an agreement to expand the network sharing across all the telecom circles. That's what the sources have told CNBC Avas, and the development that follows a meeting between Vodafone Idea CEO and BSNL chairman itself. But yes, so let's get to the closing rates first before we discuss more about Vodafone Idea, where Nifty has closed with a downtick of about 100 points below that 24,250 mark as well. So yes, before the cash session, we were at around 24, above that 24,250 odd levels. But after that, we are seeing a severe downtick of about 100 points or so. Even Sensex, for that matter, that's closing with about 100 points downtick. So yes, both the frontline indices have edged lower in the last couple of minutes as well. Even the Nifty mid-cap index that was holding into the positive territory, that has seen some bit of a selling pressure, and it has closed with about 63 points decline. Bank Nifty, however, that's bucked the overall trend, closing the day with about nearly 250 points gain. That's your Bank Nifty index. Now, some of the banking stocks which has contributed to the upside, that includes the likes of ICICI Bank, SBI, HDFC Bank, Kotak Mahindra Bank. All of these banking stocks have been holding up well, and that's what limited the downside for the markets. Now, apart from Bank Nifty index, let's take a quick check of how the other sectoral pockets have panned out for the markets today. You have Nifty Metal Index, which is also holding up in the green. And like Rajesh was discussing, that the index could be set for a new lifetime high in the coming days. So this is something that we'll be watching out too. And then you have PSU banks, private banks, all of these stocks doing well. On the flip side, autos have seen some bit of a selling pressure. Even Nifty IT index, that's down after 2 days of consecutive gains with about 1.5% downtick. Nifty oil and gas also seeing some bit of a cool off, 0.5% gains coming in for there as well. So is Nifty realty coming under some bit of a selling pressure. So yes, a mixed sectoral picture. But yes, among the broader end of the markets, it's the Nifty small caps which has bucked the trend with about 0.8% gain. Now, let's take a quick check of how the large cap movers and shakers have panned out for the market like this today. On the gainers front, you have Kotak Mahindra Bank with about 3.5% gains, followed by gains led by Ultratech Cement with about 2%. Axis Bank also holding up well with about 1.5% gains. HDFC Life, Tata Steel, JSW Steel, some of the other gainers on the Nifty 50 index. And on the losers front, you have Infosys with about 1.5% drop. Power Grid also not holding up well with about 1.5% drop. Bharti Airtel with about a percent drop. Tech Mahindra also losing in the trade. L&T, Nestle and Shriram Finance, some of the other losers right on your screen on the Nifty 50 index. Now, given that we have seen some bit of a volatility that has crept in for the mid-cap basket too, let's take a quick check of how the gainers and losers panned out from there. You have SAIL with about 5.5% gains, Bank of Maharashtra with about 4.5% gains from the mid-cap basket, Ola Electric, NMDC, Ramco Cements, some of the other gainers on the Nifty mid-cap index. And on the losers front, you have CG Consumer with about 2.5% drop. Then you have Bharat Forge, Balkrishna Industries and Dixon Tech also remaining some of the losers on the Nifty mid-cap index. But yes, let's come back to Rajesh and talk about Vodafone Idea. Like we were mentioning that it has reached an agreement to expand the network sharing across the telecom circles with BSNL. That's the reason why the stock, despite seeing an early pop, has seen a bit of a downtick with about 0.5% loss. But over the past 30 days or so, the stock has already seen a gain of about 15%. Rajesh, your call for Vodafone Idea, high beta name, but what level should we watch out next?
So kind of the news flow which is coming to this company is on the positive side, and there is a sign of revival which is taking place. That's why we are seeing that again trader investors confidence and interest is coming back to this stock. That's why stock able to take out the major supply zone which was at around 1350 kind of level. So breakout is already there on the near term, short term chart. So looking at the strength on the near term chart, we believe that if it's sustainable 14 rupees, 14 rupees 20 paisa, I think there is a possibility that stock can gradually move further higher to 18 rupees to 20 rupees price band. That would be the next major supply zone for the counter. So at this juncture, those who have bought at lower level can trail stop loss around 14 rupees 20 paisa, and for upside target of 1650 as well as 18 rupees.
Okay, all right. That's your Vodafone Idea. That's how it looks like from a technical standpoint. But let's also take a check of how the positive contributors on the Nifty 50 have panned out. You have Kotak Mahindra Bank, ICICI Bank, JSW Steel, Axis and Ultratech Cement also contributing positively to the Nifty's upside. But Reliance Industries, that's negatively contributed to the Nifty in today's trading session. Your call on Reliance Industries, Rajesh, how does the stock look like from a near-term perspective?
So stock is still in a consolidation only. Looking at the last 3-4 week price behavior, stock is almost hovering around 20-50 day moving average. Looking at the near term setup, 1280, 1290 is the immediate support area. If it's break, then we may see some profit taking to start in this counter. But looking at the near-term, short-term structure, I think we may see further more consolidation in range only. 1280 to 1290 would be the support area. On the higher side, 1320, 1330 would be the supply zone. So I think some more consolidation we may see in this range only. Either side breakout will decide the major direction.
Okay, all right. That's your Reliance Industries with about 1.5% fall. So plenty of heavyweight stocks have also capped the upside in today's trading session. But apart from that, Rajesh, your top picks for the day, what are you finding attractive from a technical standpoint?
So I think first stock is from the automobile space, that is Ashok Leyland. After a brief correction, stock has shown very strong recovery from the lower level. 170, 72 act as a good support area, and the kind of buying interest which we have observed in last two trading session, I think here there's a possibility of 188 to 190 kind of target. So Ashok Leland is buy with stop loss of 177. Another stock where we are focusing is Cochin Shipyard. Strong buying action in the last couple of days. Fresh breakout is visible on daily, weekly time frame, comfortably holding about to all its near-term moving averages. And looking at the daily chart, there is a inverse head and shoulder formation breakout is already took place. So we believe that 1600 to 1620 would be the immediate target on the downside. 1520 needs to keep as a stop loss. And the third stock that we like is from the pharma space, that is Glenmark, and the kind of breakout the stock is enjoying at this moment. 2500 to 2520 would be the target on the downside. 2420 needs to keep as a stop loss.
Okay, all right. Those are some of your topics for the day. But yes, on that note, I have to let you go, Rajesh. Thank you so much for your time and joining us.
Yeah.
All right, once again, a subdued session for the markets where we are seeing that the frontline indices have closed in the negative territory. Nifty has failed to hold above that 24,300 mark that it swiftly reclaimed in yesterday's CAS auction session too. And market breadth, however, that's remaining favorable towards the advances versus the declines. One particular sector which has been gaining traction, that's your banking index, which is seeing some bit of a recovery after 2 days of consecutive fall, and even for the metals basket, that is also swiftly gaining traction too. But yes, let's talk more about markets and how it looks like for the long term. Let's get on board with the next guest of the show. Joining me is market expert Sunil Subramaniam. Sunil sir, good afternoon. So good to have you back. And, it's been a quiet day for the markets today. Nothing new. We've been consolidating since a month. So even if the result season was stellar, there's nothing much happened on the Nifty front. What do you think has been keeping the sentiment muted?
I think the sentiment is muted more for the international news because on top of the Gulf War not really going anywhere, and you saw Brent crude spike, though it's now easing back again. You saw the yield-related bond yields spiking up in the longer end, concerns are in the US fiscal deficit. I think these are made overall the situation a bit cautious from an FII perspective. And so I would say that there are no big domestic triggers also immediately. See, as you said, the earnings season was very good, and the monsoon news also, which was initially very bad, has eased up. The Kharif sowing is also only about 2 or 3% short compared to last time. So I think that overall the market is now looking for a new direction, and there's no clarity around that because the RBI policy is in October now. And domestically, the festival season will start towards the end of the month. So I think this is just a consolidating market because it's seeking direction. I would say there's no specific trigger. Macroeconomic news is okay. The oil prices at around average of 90 are also being factored in by RBI. So I don't think that really there is much to worry. But I think also there's not much to rejoice in terms of this unless the festival season comes through and shows a very strong pickup in terms of the sales side on consumer durables, auto, and discretionary consumption.
Okay, got it, got it. Sunil sir, we have seen that there's a plenty of block deals that has been happening, block deals from IPOs to QI, and then you have the OFS tool which has been taking place. What do you think? What does that signal? I mean, is that going to be a liquidity overhang, at least for the near term?
I'm not sure it's a liquidity overhang. It's just that DIIs and mutual funds, which are sitting with good money on the SIP front, the bulk of the money that they are getting is in mid and small cap funds, more than 65% at last count. Now, when you have such a large money coming into a very low floating stock pool, like mid and small caps, right? And micro caps. It's better that if you want to do a large deal on a company you like, the block deal always better because it doesn't come and shift the market so much. Whereas you step in with a buy order of that size, your own action is going to make the price go up or come down dramatically. So I think block deals are the preferred way for institutional, especially because if they were getting more money into large caps, there's a large free float there, which could easily absorb it and they can just do normal trading. The second reason for this is the whole cash system. You see, you have this whole equilibrium pricing. Now, people are not very sure, right, on where the equity price is going to go. The market is still getting used to the system. Like so many days you've seen last half an hour, the market spikes. Today you're seeing it fall actually. So it's knife cuts both ways. So I would say that by doing these block deals, you're trying to get out of getting into this kind of a big deal. Earlier in the volume weighted average price model, you could actually schedule your large order in the last half an hour, and your volume of the order would make sure that that price was closer to the closing price, right? Now that benefit is gone because you will quote at some price and somebody will come and do something there. So I think that's where increasingly this. And the third is from a supply side, the OFS side you mentioned. So a lot of the private equity money, venture capital money, which had been promoting a lot of these companies, when they want exits, they'd rather negotiate a block deal and leave without actually coming into an open market. So multiple reasons why block deals are become, and I think this is going to be the order of the day, and you're going to see more and more of these in the coming weeks, months, and years.
Okay, got it. So, you say, coming to the point of multiple reasons that you cited for block deals, today itself we saw about 5 stocks that saw block deals worth about 6,900 crore rupees. Now, apart from Physics Wala, all of these rest 4 stocks, be it Grow, Rubicon, Wellspun, they've all performed well on a YTD basis. So, my question is that should we read this as just a routine monetization by early investors and not be worried that such influx of block deals raises any fundamental concern?
Well, you'll have to take it on a very company-specific basis. But generally, you're mentioning that prices have risen. It means when their sellers are looking for the best price to exit, right? Now, so it's the natural law of the market, right? Buy low, sell high. So the seller is going to look for a high. So when it's already rallied a lot, he feels the timing is right. But that's market dynamics. That's the way capital markets, that's the way capitalism itself works, right? So I wouldn't say that worried, but specifically, I would be worried on an OFS where the financial investors exiting, I'm not worried. But if the real promoter is exiting, the guy who has got to run the business, that's not a good signal in terms of what he's saying about his company's future, right? So, whereas if somebody is invested in the early stages of the company and just looking that we have made our business, we took the risk capital, now we want to take our profits away because a lot of these investors are funds. So, they owe a return to their ultimate investors. You take a lot of these private equity capital, they're all running funds. And there are HNIs who are behind them, institutes behind them. So they need to be also giving back their, repatriation of capital to those investors. So that's a part of the healthy capital market. But like I said, again, this promoter of the company, if he's saying, oh, these valuations are too rich, I don't believe my company is worth this money. So let me take my money out while the going is good. That's a bad signal. So it's got to be very specific to who is selling, why they're selling. Was there a recent sharp spike in the price so that he's saying, I can sell it now and look at buy it back later? So these are all the things to judge. So you can't take a blanket rule and say, oh, the price rose up, so, it's not a good thing to buy it now or otherwise, because the people who buy are generally long-term holders. These are not short-term players. So a mutual fund buys it with a 3 to 5 year outlook. So as long as he's confident, he's done his math to say that this company's market share is going to grow, EPS is going to grow, and I'm willing to stay with it for that long period of time, there's no problem with it.
Okay, got it. But any reasons behind such deluge of block deals that we are seeing in the markets?
The reasons are, like I said, the large amount of private equity which has gone into funding a lot of these, right? And they need exits. They get a partial exit during the IPO, but they would also like to test it out because IPO is a negotiated price. They come up with a book building and they name a price. Is that right or wrong? It's only the secondary market which will later tell them. So when they come into the secondary market, they know now there's a large amount of buy and sell and an equilibrium price come in. So they feel now is the price discovery has happened. So beyond this, unless a company is going to report much better numbers in the future, which could make the stock price go up, they feel it's a good time to take out our money. So I'm not reading much into the fact of that. Second is that the secondary market, right, has also become a bit crowded because there's so much money, especially this mid and small cap part that I mentioned, right? The SIP book itself, out of the 31,000 crores of SIP book, my estimate is that at least 20,000 to 22,000 crores is in mid and small cap. So when you have a large amount of capital coming into a very low liquid market, right, that block deal space is the right space where both the seller and the buyer feel that they don't want to take a risk of putting a sell order or a limit order there and taking a risk with that, right? So because they actually shift the price because of the volume. So block deals, I think, are given the structure of liquidity that is prevalent in the domestic market, the way it's coming out, I just described. I see block deals as increasingly playing an important part of not promoters of those who finance the company's growth exiting, and the buyers also saying, I can get a good company with a good solid allocation so that it makes a meaningful sense to my returns from a diversified portfolio which a mutual fund runs.
Okay, got it. So, Neil sir, let's also talk about the US bond deals, because that's a key market headwind right now. And if bond yields remain elevated, all of these emerging markets, they anyway lose appeal. And since India is already an anti-AI trade that the world has hyped about, it's quite uncertain if FPIs would return, and if this return of like 2 months of net positive inflows is going to stay back. What's your take here?
Look, I think that India's share of the emerging market index is already at a rock bottom. So I think that any money now coming less to emerging markets, India is not going to get that affected. We were at 2 years back at 20% plus of the emerging market index. We are now at half of that. So I think we are getting capital, which is patient capital. We are getting capital that is looking for a low beta market within a high beta emerging market space, which India is, both thanks to DII buying, making sure that the volatility in the market is less. Even now, you saw volatility index is below 11 in our markets. Second is the fact that we are a much more diversified stock market than those AI specific markets. The third aspect is we are a much more diversified economy also compared to those economies. So there is one core level, and I think we are at that rump of the long-term capital which is seeking a diversified growth from a market which has got good domestic buying support so that the volatility will be less. We are getting that capital in. I don't see that much to change. We only have an upside from here. I don't see further downside from FII flows because already we have lost more than half of our share in the emerging market index. India is not so bad as to deserve much less, let's say from 10% to 7 or 8% or 6%, if we don't deserve it, because I think we are the fastest growing country in the world and long-term capital players. And finally, I will say is that India suffered a lot also because of the geopolitical crisis. And when the oil prices were spiking, there are a lot of hedge funds which like to short the market were shorting India. Now you've seen we have shown our resilience in terms of how, with all the volatility in the Brent, right? Neither our inflation has spiked dramatically, nor our fiscal deficits or trade deficits have spiked dramatically. We have taken adequate dollar-related cushions. You saw the success of the FCNRB scheme has been fabulous. So I think that now a hedge fund will be taking a big risk if he's going to come and short India, because we have shown our resilience. So he's taking a big gamble. And you saw in yesterday's close cycle also, the number of shorts which got covered from about 2.2 lakh to we are now to 1.8 lakh levels. 40,000 shorts got covered yesterday. So I think India has now come to a space where we are known as the, I would say, steady Hindu rate of growth economy, which nothing will shake much. So there is no bad news as such. Oil being the worst news, and we absorb that with a lot of strength and resilience, that can hurt us from another round of short selling hitting our markets. Currency has been well protected. So that risk is also there. From an FI perspective, also looks at currency. And the near-term, short-term view for the currency has to be positive, because we are hearing that before 31st August, this FCNRB come FCB pool could be well in excess of 80 billion, and some people are talking $100 billion of flows coming in. So near term, there is also a comfort around the currency volatility, right? So I would put all of these to say that, yes, the FIs have been buying small amounts. They will probably continue. If they sell, it will be small amounts. It's going to be a range-bound FII-based flow market, which is not going to help our market to scale great new highs, but neither is it going to make our market fall to great new lows.
Okay, got it. So, Sunil sir, what catalyst will drive markets ahead? Because largely we have been in consolidation and a snooze mode. So, for a further re-rating, what is the one trigger that we are looking at?
I think two things we need to happen for India's concern. One is we need to have a blowout festival season. Because see, all said and done, the government of India has protected the retail consumer by and large from the oil price spike. We've had small increases in petrol prices, but it hasn't affected consumer sentiment. You saw the auto sales for June and July were fabulous. Now, I hope that translates to other consumer durables as we're just stepping into a festival season. So, a very good festival season demand across the consumption pack would be a huge boost because that will re-rate our country's growth and everything. Maybe from the 6.6 that RBI is projecting, it could take it up to 6.8 or 7 levels. That could be a very good positive uptick. That's number one. Number two is, of course, the war. All said and done, right? The only country which has been worst hit by the war from an economic financial perspective is India, because we import 85% of our crude. So we are not a participant in the war, but we are the worst hit. So any good news then, oil going down below 70 levels is, I think, again, will turn to be a huge positive from an FII inflow perspective, right? So those two, one is not our, it's outside India, one is inside India. Those are the two things that I see driving all other decision making. So I could have mentioned RBI policy as one, but RBI's hands are very limited. If US bond yields are rising, RBI can't do a rate cut. If inflation, monsoon has kind of played out reasonably well. Kharif sowing has been plus or minus 1 to 2% of last year. So not really such bad news, though specific onion prices in Delhi and some metros are small pockets of concern. But it's not something that is going to support the RBI do a rate cut. So a rate cut is something which will be a huge positive, but I don't see that in the realm of possibility, given international bond yields rising and domestic inflation also being sticky. So in the absence of that, it's these two factors: a huge festival season bump up in consumption, and second is a very good news on the war front, which probably can get oil prices back down to the 70 minus levels.
Okay, got it. All right, Sunil sir, let's also talk about the recent AMFI data that had come out that had suggested that large cap funds, which had led SIP investments 5 years back, has slipped below, and mid caps have taken that place. So if an investor that's looking for growth, should they find refuge in mid caps?
I mean, if you look at it, growth is obviously going to come from mid caps and small caps, undoubtedly, because the large cap space, the kind of, see, 35% is the banking sector there. You have IT has some 7-8%. You have FMCG has another 6-7%. So they are not really a growth pack. The bank is a derived economy, right? The banking economy derives on the rest of the economy. But the real economy's growth comes from the mid cap and small cap companies. So no doubt that if you want to play growth, you have to be there. But the fact is, and it's liquidity which is helping these companies. Now, I know the last quarter's results more or less justified. You saw mid cap pack, I think about 22% YOY PAT growth, and small caps at 33%. So kind of justifying the kind of valuations, the growth has also come in a quarter that was perceived to be very bad because of the oil related spikes. So I think what's very clear is that growth in India is going to come from mid and small caps. The issue is that the valuations are just about at the reasonable level. They're not cheap. So you got to be patient. So when you hunt for growth in mid and small cap, yes, but in your hunt for growth, you have to keep your time frame at an extended 3 to 5 year period. Because in the next 12 to 18 months, let's say very simple, I'll take one line out here to explain what could happen, which could disturb this. Let's say those two conditionalities that I said come through, which is a sharp spike in consumption in the festival season and a war coming to an end before the US midterm elections, let's say. Okay, now that's a positive. And you say FIS coming back to India. What's going to happen? Suddenly you will say FIS buying the top 150 stocks in the country, and those stocks are going to start rising. And you will suddenly see people have this habit of chasing returns. So one of the reasons why mid and small caps money has been flowing in, apart from the SIP, is the fact that those returns have been very good over the last 2-3 years as the large caps which have underperformed. The number of good quality top stocks which have delivered negative returns over the last 3-5 years is on the lips of everybody. So they are not enthused by the big names in that, and they are going behind the mid and small cap names. The returns have justified it. It's a virtuous cycle which has been building. But if suddenly these two good things happen and FIs come in, and if the large cap stocks start performing, you might see that people start chasing that money and they will try to shift from this to that. So it's their own behavior could change this performance. So all I'm saying is that long term, yes, mid caps and small caps are going to deliver the growth premium to you. The valuations currently are discounting it, but if you hold it, the growth itself should deliver reasonable returns to you. But in the short run, all of these moves could mean that there could be a spell of volatility around these names. So at that point of time, you need to have the patience to stick it out with your medium-term outlook. Second is, as the SIP book is saying, right, stagger your money. If you're putting more and more in through SIPs into mid and small caps, I have absolutely no qualms of it. That's the best way to do it. But putting in lump sums into them means that you've got to be prepared for a significant degree of volatility in the coming weeks, months, depending on these other things that happen. And hence, I would say, I would urge caution in terms of putting in lump sums into mid and small cap, but stick to an SIP route, have a clear 3 to 5 year plus perspective in your investments, and I'm sure that they will deliver value to your portfolio.
Okay, got it. But Sunil, when can we watch the large caps to return? Back then, everyone was saying that when FPIs return, then large caps will also see momentum, but nothing so far.
But FPIs are not really returned, Lavisha. You're talking about some 1,000, 5,000 crores. You've got to be talking about FIs buying 50,000 crores to 1 lakh crores a month. That's when large caps will perform. What happened in March? When the war hit, they sold 1.25 lakh crores in that month. Compared to that, we are talking about 5,000, 6,000 crores of flows. So this is not an FPI return. It is just an FBI exit which has put it on pause. It's just that the short selling, which was very rampant earlier, has come down to very little now. So it's not that the FIs are returned. So for large cap to perform, right, FIs have to return because they have the holding capacity, because the floating stock is so large that no amount of DII buying. Let's say same March month, I'll tell you, right? You saw 1.25 lakh crore selling by FII. You saw same month 1.5 lakh crore of DII buying. 1.5 lakh crore. Yes, it was not all in large caps. It was split across large, mid, and small. But that couldn't help the market to cover March. So the large cap market especially. So you have to have the FIS come in big play because they're already significant owners of large cap stocks. So for them to come and buy even more, there is headroom. I was studying the Nifty India FPI 150 index, right? There's still headroom there in a lot of stocks for the FIS to increase. But for that, something needs to click in their mind that they have to look at India favorably. And again, I go back to those 2 points that I said. So those two are the triggers for FIs to change their outlook on India. Of course, we can always wish for one man's meat is another man's poison, right? If there's a big AI collapse in Taiwan and Korea, right, you could see diversion of money to India. I don't want to wish for somebody's bad news to help us, but yes, that could be a big trigger. Because if suddenly they feel that it's time to book profits out of Taiwan, Korea, and the AI-related markets, and then they're looking for an alternative space within the emerging market, we are a safe, steady growth economy. For all you know, those flows could come into India. But for that, something bad has to happen on the AI front. I don't wish for it to happen, but if it happens, that's good news for us and for large caps.
Okay. So Sunil sir, coming to the last question, if an investor is looking at in the Indian equity market, any sectors, themes where they can actually bet, which looks attractive from a growth visibility point of view?
So I would say that your time frame, I'll put 2 frames in. Somebody with a 1 to 1.5 year outlook and somebody with a 3 to 5 year outlook. 1 to 1.5 year outlook, I would say focus on consumption pack, discretionary consumption pack, along with private banks and NBFCs, and including medium-sized private sector banks. That should be because I see the festival season is an extended one, which will last and will do well. For medium term, I would say put your focus a little more on the capex cycle, both the government and the private sector. So infrastructure play and capital goods play should be having a higher allocation. And I would put PSU banks as the main financiers of the infrastructure cycle, because execution of infrastructure order books are largely in the hands of SMEs and MSMEs, who are largely financed by the PSU pack, because both the NBFCs and the private sector don't have much knowledge of that sector. They've burnt their fingers there when they try to enter. You would have seen some reports there. But PSU banks have been lending there for decades. So they know that good NIMs there, because those people don't have bargaining power. So when a capex cycle really picks up, it's the PSU banks plus those capital goods plays that are going to do well. So with the medium term, I would say urge you to put a little more weightage in terms of that there. So overall, then, if you buy a diversified banking pack, that should hold you good, because it will have both banks, NBFCs, capital market players, and PSU banks in the banking space. So hold that as a constant, and short term you layer it with discretionary consumption. Medium term you keep switching the layer into the infra capital goods, metals pack.
Okay, got it. All right, Sunil sir, on that note, I have to let you go, but thank you so much for your time and joining us.
Thanks.
All right, that was Sunita taking us through some of the fundamental aspects of things, which themes look attractive from a longer term horizon. But so far today, we have seen that markets have once again consolidated. Nifty and Sensex, both of them have ended in the negative territory, despite what we saw a recent cool off in the crude oil prices to about $85 per barrel. But yes, apart from that, we'll be watching out tonight how the Nvidia's results pan out, what the guidance means going ahead, and what it means for the AI rally and the AI craze which is going on in the global markets. Apart from that, US PCE inflation data will also be a key metric that will determine what the US Federal Reserve has in store in terms of their rate path trajectory, given that we've seen already that the US debt had mounted to a record high, and even fiscal deficit for that matter, once again a record high numbers on a monthly basis. So yes, both of these metrics we'll be watching out for. We'll watch out how they behave in tomorrow's session, what reaction we'll be getting from the tech giants as well in the US markets. But for the time being, that's all we have for this edition of Closing Bell. It's a wrap from me. We'll be meeting with you at the same time tomorrow. Until then, do stay tuned to Money Control.